Good afternoon, guys. It's Work and bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. Looking at Bitcoin to the US dollar 4-hour chart on Coinbase. And last time we spoke, guys, Bitcoin had just broken down below. Actually, I think we were operating right below this $11,500 zone, guys. Looked like it may wanted to come back up and test it here. We had this very, very small on the, we talked about the very, very small, tiny microstructure on the hourly double bottoming here, looking like it may want to come back up and test that 1150 again. Sure enough, that's exactly what we saw. Tested it for about 8 hours or so and just recently broke right back up above it, looking like it wants to come back up and test our descending resistance line. Now, the more I'm watching this, guys, the more this does yeah, obviously, clearly this is a consolidation pattern, but the more I can see that it looks like we're operating within a tighter and tighter range. And this does, as I hinted to yesterday, this does certainly, oh, I just moved my cursor there, didn't mean to do that. This certainly does hint at a breakout in the next, I would say, 24 to 48 hours. We should have some kind of resolution to this. As I said on my videos yesterday, typically we're not going to see that over the weekend. Doesn't mean that can't happen. Just means typically what you're going to see is a breakout probably sometime on Monday would be my guess. Doesn't have to happen on Monday. Could happen on Tuesday. Could happen on Wednesday. Could happen on Sunday. But just guessing, guys, it looks to me like it does want to break out. I would say, again, in the next 24 to 48 hours. We are now consolidating, as I said, right above 11,500, below our descending resistance line here. As I pointed out yesterday, popping out here to the daily chart, does seem like we are building a decent base, even though we have broken that base by a wick. It does seem like we do have a nice, decent base here that sits somewhere between 10,900 all the way down to and including that all-important $10,650 zone, guys. That's going to be the pivotal, in my point, line in the sand, or in my book, line in the sand. We do break below that $10,650 zone. I do think the next stop is going to be at least this 9,950, as we discussed at length last time. And of course, to the upside, we're going to be watching that $12,000 zone, this prior high. Anything breaking above that decisively, very, very, very likely we are going to come up and test at least 12.4, but in my opinion, that's going to be your signal to front run a continuation to the upside, very likely testing at least 13,000, more likely coming up and testing our 13,500 to possibly $13,850 range. And my bias would shift if we do take out 12,400. My bias would shift to the upside, would shift taking out this $13,800 zone, and then of course the next stop above that would very likely be 6,200. Now, would we explode right to that 6.2? More than likely not, although it could happen. More than likely not, guys. More than likely we are going to stop somewhere around 14.2. Looking in the past here, we can see that we do have a bit of, actually let me pull up the weekly. There we go. We do have quite a bit, actually, let me go back to the daily. Sorry about that. We do have quite a bit of buying and selling that took place. There we go. That took place right here, right about 14,000, about 14.8, 14.7, 14.8. So I would expect Bitcoin to find some resistance around 14.8-ish, somewhere thereabouts. But I would not expect it to top there. In my opinion, I do believe that we'd be continuing with a stop somewhere around 16.2 to 16.3. That would be my target. Would I just completely let it ride? No, I wouldn't. If I did break up here, if I was going long, which I will, but this is, of course, not financial advice. You do what you want. I would have a trailing stop loss the entire way up, just in case we do have any surprises. But yeah, a break above this 13.8, guys, would very, very likely signal a much more continuation to the upside. Zooming back into the 4-hour, guys, we can see that our volume is, as I pointed out last time, our volume is just nice sloping down here, again suggesting a very, very possible breakout here in the next 24 to 48 hours. Let's go ahead and check our moving averages, exponential moving averages. Looking at the 4-hour chart, guys, again, all major moving averages, exponential moving averages, all converging right here. And it's very, very rare that you see them all on top of one another like that, guys. Again, that would suggest a major move here. We are starting to see Bollinger Bands constrict. I know we discussed all this yesterday. Looking at the daily, 21-day exponential still holding strong, guys. As long as that doesn't break, again, that does bode well for the bulls. And, you know, that would send my bias a little bit more bullish, especially given the fact that we have now broken above the 8 exponential on the 8 daily exponential there. I don't want to say that I am bullish to the upside. I'm certainly a little bit more agnostic, maybe with a slight bias to the upside here in the short term, at least coming up and testing that about 11,000, maybe wicking up above to that $11,800 area, somewhere thereabouts. But again, nothing. I don't have any strong feeling until we do decisively take out that $12,000, at which point I will have a very, very strong feeling and strong bias to the upside. And the same is true to the downside, guys. If we do take that $10,650 zone, which would bring us down below that 21-day exponential, that would again shift my bias to the downside with a drop down to at least $10,000, if not testing that low of 9,000. What was it? 9,670. Yeah, 9,000, really $9,700. I do think at that point, though, we'd more than likely be dropping down to that $9,400 zone that we've been eyeballing, and that is where that 50-day simple moving average does sit, right around that area. All right, checking our indicators back on the 4-hour. We can see on the RSI, RSI is giving us a little bit of resistance right here. I do think, well, that's a little bit higher than I want. Right about here, guys, if we do end up breaking above this zone, guys, again, I do think that that would be a very, very bullish sign. Let's wait and see if that does end up playing out. But coming in here on the hourly, this is what I'm the most interested in. Looking at the hourly, guys, and again, I'm usually not a big fan of looking at smaller time frames, but since we are trying to figure out which way this thing is going to break, I do try to dig down in a little bit deeper. And what this hourly RSI is showing me is we do have a nice, decent support. It's been tested not once, not twice, but 3 separate times. That does tell me that this is an extremely relevant support, and if this does get broken, may in fact be your first signal that price is coming down. Now, again, that is not something to hang your hat on. That is not something that I'm telling you that if this does happen, we are breaking to the downside at all. That is just one piece of the puzzle in the overall larger picture. So just make sure you're keeping that in mind. Something else to keep in mind here, as we just broke up here, it does look like price does want to possibly come back up and test about 11,700-ish, somewhere thereabouts. That being said, I would not be surprised if it does do that. I wouldn't be surprised to see a quick rejection coming back down and testing that 11,500. And if I come over here and I look at the RSI, look at the hourly RSI, again, looking for very small opportunities to swing and or scalp trade, or excuse me, scalp trade, not swing trade. We can see that we do have some bearish divergence there on the hourly RSI, guys, which would suggest, and again, I know that's not necessarily confirmed as of yet. Actually, you know, I take that back. Yeah, that is actually confirmed. We did take out the prior candle, so yes, that is actually confirmed. So we do have some bearish divergence on the hourly there, and that would suggest price possibly coming back down. If we do come up here and test in the short term, this 11,700 would suggest coming back down and immediately dropping down to that 11,500, if not down to our prior area of consolidation around 11,450. Why is that significant? Well, if you're looking at if you're just sitting on the sidelines waiting for a major break, it's not. If you're looking for very small scalp and or swing trades, it is significant, can give you some decent entry and exit points, but again, I'd get in and I get out. Reason I point that out is I know a lot of people are asking me about smaller time frames. How do I swing? How do I scalp? Those are the kind of things that I'm looking for a very, very quick swing and or scalp trade, or excuse me, I keep saying swing, very quick swing, or excuse me, scalp and or day trade. Those are the kind of small little things I'm looking at. But for you swing traders out there, long-term holders out there, it makes absolutely no difference whatsoever. All right, quickly checking longs and shorts. Basically, longs flat, shorts pretty much the same, guys. Market is just waiting for a move. Nothing to read into there much at all. Let's see. I know a lot of you have asked me about. For some reason, I'm getting tons of questions about the Bitcoin dominance chart. So let's go ahead and look at that. And I'm not sure why. I had about 4 of you ask me that. So let's just quickly take a look. Let me go out to the daily, actually. Yeah, I mean, we discussed this last time, guys. This is the Bitcoin dominance chart does look very bullish. That does not bode well for altcoins. And I think I've told you this many times. In fact, I think last time we talked, I did tell you it was going to come back down and test at least that 62. And did it make it down to 62? It actually made it down to about 62.8. So close enough. We were looking at this prior swing high here. It looks like it did break up above, come back down and test it. And the fact that we bounced right off of, I'll just point out what I'm looking at. Let's see. Here. Yeah, the fact that we bounced right off of the prior swing high, came back down, swing high, resistance acted as support, and now we're bouncing up now. That is extremely bullish. We do need to take out about 65.9. If we can take out 65.9, guys, this thing may just end up taking off, and that does not bode well for altcoins. I know many of you have asked me about alt season. I don't think alt season is going to be, and I've said this so many times. I know you guys are sick of me sick of hearing it, but I keep getting asked the question, so I keep needing to repeat it. I don't think that alt season is going to be nearly what it was in 2017. I think most of the institutional money, smart money that's interested in Bitcoin, a lot of the smart money that's currently buying Bitcoin, they're doing that. They're buying Bitcoin. They're not buying altcoins. You have to remember, this is a totally different set of investors coming in. These are not people that are looking to get rich quickly. These are people that are going to do their homework. These are people that are looking at a stable, as stable as I can be. I use that term extremely loosely in this case, but as stable as it can be. Bitcoin is about as safe of an asset in crypto as you can have. Again, in crypto. That is my disclaimer there. So that's why I think most of the money is going to go into Bitcoin this time around. I don't think you're going to have those 100, 1000x altcoins as we did back in 2017, as I've said so many times. And this Bitcoin dominance chart is kind of proof of that. As this thing continues to go up, we really need to see, in my opinion, we really need to see this thing drop at least below 60, more like 55-ish, and then start consolidating before we're going to see altcoins really start to pump. Now, again, that's just my opinion. I could be proven wrong, and we're looking at really the second time around for alt season. So, there's really not a whole lot of history in this market. So please keep that in mind. This is a whole lot of speculation. I don't mean to say anything with certainty. I'm just kind of giving you my thought process, and knowing a lot of knowing how a lot of the smart money is thinking here. A lot of the smart money has no interest in altcoins. They have a lot of interest in Bitcoin. Now, will some of these funds start investing in the larger names, Ethereum, Litecoin? Yes, they probably will. But again, the majority of the money, all eyes are going to be on Bitcoin this time around. All right, I know that was just basically a repeat of yesterday, guys, but just wanted to give you guys a quick update on what my thoughts were there on Bitcoin. Just basically, it's a waiting game, and again, I do think sometime, very likely, if not late tomorrow, sometime on Monday, we should see that larger move. All right, getting to your comments, Borges guy says, thanks. Any thoughts on the impact of Tether and the court case coming up on July 29th? I'm not a fan of Tether. I've told you this many times. I think they are extremely shady. That being said, do I think that this court case is going to have any impact on Bitcoin? I personally don't. Sure, you're probably going to see some emotions fill in if Tether was to go under. Of course, you're going to see a lot of. Of course, you're going to see Bitcoin take a hit in the short term. But we've got so many altcoins, or not altcoins. We've got so many stable coins. What was it? The USD, not USDT, but USD coin. That's the coin I'm thinking of. We got, that along as, many others that are sitting there waiting to take its place. So yes, if Tether goes under, is it going to be a hit in the short term? Yes. Is it going in the long term? Is it going to really affect Bitcoin that much? I truly don't think so. And I try. I mean, you're going to drive yourself crazy if you really do, if you try to sit there and figure out the impact of Tether. There are tons of other competitors that would love to see Tether go under and would love to see. And probably more deserving competitors would love to take the reins that Tether seems to be holding. All right, let's see, Mrs. Pack31Y says, working. Thanks for all you do. I always figure you had some weatherman experience because of your communication style, but pilot makes sense too. Thanks and appreciate it. Hey, thank you. I appreciate that. Yeah. She's referring to the prior video. I explained my background there. 12 Fruit says, I don't think you've. Let's see. I don't think I've seen you use the volume chart. Could you comment on your thoughts about how volume plays or does not play into your predictions? No, I do use the volume chart. I use the volume chart, and I also use the overall daily volume just to kind of get an idea of whether or not anything is whether or not a move is valid or invalidated. In fact, I think I pointed it out quite a few times. Now, you're right in that I usually have this. Actually, I've got it on today just because I wanted to make sure I pointed out this decreasing volume as I pointed out on the last two charts. But typically, I'll have that off just because I don't like to have my chart any more cluttered than it already is. But no, certainly I'm always keeping the volume in the back of my mind. How does it play into my overall technical analysis? Obviously, it plays very well. If we do see a breakout on volume, that holds a whole lot more weight than if we don't see a breakout on volume. Obviously, the overall daily volume is playing a huge role. I've discussed numerous times how we're at basically at least twice as high as we were back at the peak of 2017 on daily volume. Obviously, that's showing you that that's the kind of thing you'd want to see at the beginning of a bull run. This is one of the main reasons why I have called this thing or I have speculated that this is the beginning of a bull run. Now, does it have to be? Absolutely not. It just, my bias is that we have seen the bottom and that this is in fact the bull run. And as I said in my last video, I do think once we do take out that prior high of $13,850, I do think that's going to put to bed any thoughts that this thing may be just a bear market rally. Let's see. Radiant Lunatic says, love this interactive, instructive video style. You're growing a great community here, and I can see your channel going to the moon. Thank you. Well, thank you, Radiant Lunatic. I appreciate you always stopping by, man, and your contributions. Nicholas says, thanks, working. I'll try not to get emotionally attached, like you said, and I really only watch your channel, Crypto Zombie and Optical Art. Well, thank you, man. I appreciate that, and you know, best of luck to you, man. I know you're very young. If I had to guess, I'd say you're what, 15, 16? Would be my guess, and I honestly applaud you for getting involved and being interested in this kind of a thing going forward, man. I truly do applaud you. Please read as much as you can, paper trade as much as you can if you're interested in trading, and you'll be way ahead of 90% of the people that are 3 times your age. Let's see. Zoom Vu says, can you please give your explanation on how do you tell a real order book versus spoofing based on your experience? Yeah, that's in relation to answering your prior question on trading the order book. I told you, do not trade order books. Trading the order book is how you get wrecked. Order books are extremely manipulated, as I discussed earlier, guys. I mean, you know, whales, market makers, they can and they do, trust me, I know from firsthand experience, they put in fake buy and sell walls all the time. Now, how can you spot a fake buy or sell wall? It would take me quite a while to sit here and explain all the intricacies of how you're going to spot a fake buy and sell wall, but to just give you a very general overview. In fact, let me see if I can dig up a picture here. Stand by one. Okay, so this would be a good example of a fake sell wall. This you can clearly see if I kind of zoom in here, and I don't know if you guys can see this or not. Let me see if I can blow this up a little bit more. There we go. You can kind of, crap. Stand by, guys. I apologize. Technical difficulties. Okay, back with you. Okay, so you can see here that this sell wall, basically, you can look at the buy wall. Let's start with the buy wall. This is the fake sell wall. You can look at the buy wall here, and you can see how it kind of steps up here. Very closely zooming in here, you can kind of see how this steps up here very slowly, gets kind of up here, and, you know, and then kind of slowly flattens out, kind of comes up here. But that's the kind of thing that you would expect to see, these little ridges, if you're looking at a real buy wall. Now look at this sell wall. Look at the sell wall, how it just completely slowly starts to slope up, and then it literally goes up in a straight line. There's no break. There's no natural rhythm. There's no, I mean, people don't buy and sell like this. This is, you know, this is a completely abnormal looking market, abnormal looking buy and sell wall, with the fact that we just have a complete 100% straight up straight line here. This is an example of a very likely fake sell wall. Why are they going to do that? Because they're wanting to scare people out of their positions. They're wanting to drive price down. And and you can see that this sell wall is not sitting right there where it could get liquidated. You can see there's just a tiny bit of sell orders that are sitting, legitimate sell orders that are sitting right before there. And if those sell orders were to get filled, this thing would just completely disappear. So this is kind of how, anytime you see something like this that looks completely abnormal, and again, I'm extremely simplifying this here, guys. It is not this simple at all. Do not try to figure out how to and, you know, without going into some serious digging, how to figure out a fake buy and sell wall. But anytime you see something like this, guys, this is very much indicative of a fake sell wall. And again, this happens all the time. Just because you see something on the order books does not mean it's going to get filled, does not mean it has to get filled, and does not mean the people putting the orders in have any intention of it getting filled. This is, more often than not, you're going to see that, and it's just trying to fool people in order to drive price up or drive price down. So please do not get unless you truly know what you're doing, and more than likely, unless you're trading with it's a very expensive bot, which 99.99999% of the people listening could not afford. I would just don't trade off the sell wall or the the order book. All right, Ballsy. Your policy blowing. God, this guy cracks me up. Love the news intro song. Thank you. 880 says, great to hear your perspective on BTC fundamentals working. Interesting to see if it can be used as a store of value in future currency. I was wondering how you set up your Fibonacci tool, as it seems different from standard on TradingView. Not sure what you mean, how I set up my Fibonacci tool. Let me, you basically, a fib tool, you know, I think some people get a little bit confused in trading different time frames. Basically, depending on the time frame that you're trading, whether you're a scalp, swing, day trader, it's going to depend on what Fibonacci or what structure you're looking at. Now, if I'm looking at a microstructure, for example, let's say that I'm just zoomed in here on the daily chart, and I'm only interested in maybe a very quick day trade or a quick scalp trade. I'm wanting to know where the bottom is, etc. Where am I going to draw my fib level here? Well, just looking at the daily, I'm very likely going to come down here from the swing low. You know, very simple. Go up to the swing high, and of course, now I've got my fib drawn out. So basically, just your swing low to your swing high. I'm not sure if that's what you're referring to. Now, if I'm looking at this from the other direction to see whether or not I'm excuse me, I'm looking for a short entry, something like that, and I want to go swing high to swing low, that's still a very valid thing to do. So I go swing high from this latest microstructure, swing low to this latest microstructure, and of course I've even pointed this out. We can see the 618 fib level lies perfectly off of our prior high here, the one that we're actually looking for to get taken out at about $12,400. So that would be the proper way to do it. But you're always just going from the swing low to the swing high, or the swing high to the swing low, depending on which way you're trading. You know, and typically that would depend on, am I trading an uptrend, am I trading a downtrend, am I trading the micro trend, or am I trading the macro trend? And there's many trends in between. So that, you know, am I trading this correction? So I'm looking to try and short this thing down, thinking the correction is not over, even though the overall macro trend is very bullish. I'm still trying to get a quick short in on this correction before it continues to the upside. So at that point, I'd be looking at possibly, or at least referencing, the swing high to the swing low, but always taking into account the swing low to the swing high as well. So you know, it's not a very simple answer. I'm not sure if that answers your question or not. If you can give me an example of what you're talking about, I'm happy to I'm happy to tell you what I'm looking at. But typically, you're looking at, depending on the time frame, depending on the time frame, you're looking at the trend that you're trading and the structure that you're looking at. It's basically going to be swing high, swing low, swing high, one of the two. All right, let's see. Let's see, going into Kenny. Kenny says, the shocking thing about your original videos is the number of subs you have compared to people who actually copy you and other good content makers who have tens of thousands of subs. It tells me that there are only a few serious investors who value quality content like yours. So much value in your videos, it's insane. I love crypto. Jeb, who's similar to you. Anyway, thank you. Wanted to say a big thank you. Well, thank you very much, Kenny. I really appreciate that. And yes, there are a lot of people that are, they seem to say exactly the same thing that I do about an hour or two after I put out the video. And you know, yes, that's extremely frustrating. We've talked about that quite a few times. You know, who knows? Maybe we'll end up doing something about it in the future. But yes, it's extremely frustrating. And I do think that the serious traders do see through that. But you know, hey, what can you do? Robin, but again, thank you very much for the compliment. I really appreciate it, and I appreciate you being here. Robin Clericu says, thank you. CJ says, thank you, CJ. And Andre says, can you take a look at Link? Yeah, let's take a look at Link real quick. All right, this is looking at Link to Bitcoin on Binance. I don't know if you wanted me to look at Link to Bitcoin or to USD. Either way, looking at Link to Bitcoin, this is one of your more bullish charts. Now, that being said, it does not have a whole lot of history here. So the fact that, and I don't even know what Link is, to be honest with you. I don't own Link. I'm not even sure what it is. But I will say it does have, for the very short history that Link does have, I will say that it does have an extremely bullish looking chart. In fact, I'm curious to see what... sorry, I'll just look at it here. It's got, yeah, here it is, Chainlink. I'm just curious to see how old this thing actually is, going back to November 2017. So it actually does have quite the history. So why is it that it's only, anyway, I don't want to go down that rabbit hole. I will just say, though, this is looking at the weekly. This looks extremely bullish, guys. Your first sign to see this would have been this break right here. We had a pretty strong rejection, pretty nice retracement. That was back in January, and I know hindsight's always 20/20, just kind of giving you an idea what to look for. Clearly, we had a clear rejection here. Wick, broke down very strongly. Wick, and then we broke out with a vengeance here, taking out this prior high. That was your first signal to go in long if you had been watching Link for any amount of time. Consolidated here for about 2 to 3 weeks, and then I mean, this is actually one of the more bullish charts I've seen. Let me go ahead and look at the daily. Yeah, the daily looks like it's flagging out here. Let me go ahead and look at the 4-hour. Very healthy, by the way. 4-hour looking extremely healthy, guys. So yeah, I mean, this, I'll say if it does if it does break down below, let's see, we are looking at link to Bitcoin. So what are we looking at? What's that? About 27,973 Satoshi. If it does break down about, let's call it 28,000. If it does break decisively through about 28,000 Satoshi, at that point I'll start to get fairly concerned about it. At that point, we may see a pretty steep drop if that were to happen. But please let me be clear. I'm not saying that's going to happen. I'm just going to giving you the most bearish scenario. As of right now, it looks to me like it wants to take a leg up, possibly right now. Actually, it looks like it's finding support right around 29,800 Satoshi-ish, somewhere thereabouts. Certainly flagging out here in this pattern here, guys. And I would say if and when it takes out about 33,100 Satoshi, it's going to be a very quick rise to at least 36,700 Satoshi at least. I would actually say my bias would be it probably makes new highs. Let me just quickly look at the this is on link to USD. Again, not much of a history at all. But certainly, I mean, clearly, guys, I mean, you can just see this thing. You can just see this thing flagging out, wedging out here. You can definitely see that it wants to break out in the very near future. Yeah, without question, this thing is wanting to break out in the very near future. Inside, I mean, this thing actually looks like it probably wants to break out in the next 24 hours at least. And again, my bias would have to be to the upside, just based on what I'm looking at here. Let me go to the daily very quickly one more time. And actually, I'm going to go back to the daily on Bitcoin. Yeah, well above the 21 exponential. So yeah, no, I love this chart. This is one of the more bullish looking altcoins. Again, please take that with a grain of salt. This thing is not having a whole lot of charting history on here. So again, take it with a grain of salt. But I will say it does look very strong right now. All right, quickly getting to the rest of your comments. Nicola K says, perfect as always. Thank you, Nicola. You've been a supporter of the channel from the beginning, and I really do appreciate that, man. Thank you very much. Zhang Wei says, won't comment on whether or not it's a descending triangle or not, but I will say I backtested the descending triangle on larger time frames, and that they do break to the downside 73% of the time, and ascending triangles break to the upside 75% of the time on Bitcoin. I've backtested on Bitstamp. Yeah, I actually addressed this with you already, and you're referring to in the video, I did comment on a potential making of a descending triangle. In fact, just to refresh everybody's memory, coming back here to the daily, we were looking at this, and again, this does not meet, let me be very clear, as I said, does not meet the criteria for a descending triangle in the traditional sense. But if we are just looking at the overall pattern, and that's just all we are, that's just all this is, right? We all just look at patterns and characteristics of patterns. I will say that clearly this does look like the potential makings of a descending triangle. Now, to get that confirmed, we would need to have another test down here at about 10,670 with a nice little bounce off that zone to come back up and test the top of the descending resistance line. That being said, yes, this does look like we have the potential makings of a descending triangle. Again, I pointed this out yesterday, right here. Whether or not that plays out is anybody's guess, but it's certainly an extremely sloppy one, and I was not meaning for that to be a technical descending triangle. It's certainly not. But as far as the break to the downside 73% of the time, I will say, and yesterday I think in my video I said it breaks to the downside anywhere from 55 to 65% of the time. I couldn't remember the exact number. Actually went back and looked it up based on your comment, and your comment was an excellent one, by the way, Zhang Wei. I appreciate your contribution to the channel, man. Truly do. Actually, it turns out that the number I was looking for, and this is talking in very general terms, remember, a descending triangle very generally breaks to the downside about 64% of the time. It breaks, and an ascending triangle breaks to the upside is a much greater percentage to break to the upside. I think that's about 75% break to the upside on an ascending triangle. But a descending triangle breaks to the downside about 64% of the time, which means that 36% of the time it breaks to the upside. But that is on a very particular descending triangle setup. That is not that's a general term. Now, if you look at descending triangles in a bear market, just in a bear market, or for that matter, just in a downtrend, then the percentage comes much higher, and then you're right. Then it breaks to the downside probably about 73% of the time, and that may be what you're referring to. I'm not sure. And I don't mean to correct you like an ass. I really don't mean to. This is not me, saying I actually had to look this up, and remember exactly what the numbers were. So please don't take this as my being arrogant. But yeah, the actual number is about 64% of the time if we're talking generally. If we're talking in a bear market, then you're right. I actually actually, that I didn't look up. This I'm going on memory, but I do think it's somewhere probably around your 73% of the time if we're looking at a bear market. If we're looking at seeing a descending triangle and an uptrend, it's completely different. I think that falls to about 55% of the time of a break to the downside. It's not nearly as high. And I actually, I'm going to, in your comment section below there, I'm going to go ahead and put the reference for that so you can reference it yourself. But your point is very well taken. In that in a bear market 73% of the time. But again, in a bull market or in an uptrend, even if we're not in a bull market, if you don't think we're in a bull market, we're certainly in an uptrend. And in an uptrend, it's much less. It's more like 55% of the time that it would break to the downside. All right, Andre Job says, great work. Thank you, Andre. Wookie says, I have a question. Are closing prices today like they were today, where they pump the price right before the close of the day, taken into account when considering the closing price? I see what you're saying. Was this done just to trigger bots? Or in other words, are you saying that when price does drop or pump right before a major candle is going to close, is that just manipulation? And is that taken into account? Is it taken into account with your technical analysis? No, because you drive yourself crazy trying to figure that out. Fundamentally, are you taking that into account? Yeah, I probably do at some level. But you have to remember, yes, this is a lot of bots. A lot of bots are programmed to are trying to close, or excuse me, a lot of market makers are trying to close certain candles at certain times, and that does trigger a lot of bots, absolutely, without question. If a weekly candle, for example, like we saw this weekly candle last week, this terribly bearish, let me get rid of this very quickly, this terribly bearish close last week, this just happened very close to the end. It was an extremely bearish, and certainly likely is what set off this major downtrend that we had of about 30% correction. So yeah, it does that happen at the last minute just to trigger a lot of bots or for manipulation purposes? Yes, absolutely, without question. Does that mean you should ignore them? No, absolutely not, because bots are responding to that, and you have to remember that we are trading more and more in a market with bots. And again, if you are trying to trade with bots, guys, I would not recommend it at all. Trust me when I tell you that if you're trying to trade against bots with your little, small, simple bot, you're going to get wrecked. Because people that trade with bots that are successful are people that are trading with bots that most people that are listening to this cannot afford. So be very careful if you're trying to trade with a bot. Unless you're just talking about with something simple, and this wouldn't even be a bot. Unless you're just talking about automating your stop losses, automating your entry and exit conditions, that type of a thing, where you're just getting in and getting out on very simple things. But if you're talking about, automating something that has, that you just let go of and pretty much don't monitor for an extended period of time, don't do it. Do not do it, guys. Again, not financial advice. You do what you want to do. Not a financial advisor. I want to be very clear about that. But just from personal experience, trust me, I would not recommend it. Thanks for the honest intro. Hey, you're welcome. Wookie says thank you. Thank you. Robert Patterson says great work. Thank you. Frankfurt, Germany, you deserve a lot more subscribers than you currently have. But I'm confident that traders looking for high quality analysis rather than hype and entertainment will find you eventually. Hey, thank you, Frankfurt. I really appreciate that, man. Frank, first comment. This is going to be a great video. Thanks, Frank, man. Good to see you. AALS says thank you, brother. Carl says, how about Tron? Yeah, we can look at Tron real quick. And I'm going to have to get going here very quickly, guys. So I apologize if I can't get to all your comments. This may, in fact, be the last one. But looking at Tron to Bitcoin. Don't know if you want, or excuse me, looking at Tron to the dollar. I'm not sure if that's what you wanted, but that's just typically what I use as a little bit more clarity. It does look like, let's see, we are looking at the weekly chart here, well above the 21-week EMA. That's not bad. I mean, this thing doesn't look too bad. I would say that we are trading within a pretty tight range, and I would watch this zone right here at about, what are we looking at, 0.0388, and this zone right here at about 0.0293. I do think that a break above or below either one of these, and obviously a break below this would bring you below the 21-week weekly EMA. Break below that, guys, very likely brings us down to about, let's see, 0.0236. A break above this, guys, would be extremely bullish, and Tron actually has the potential to run if it can break above about 0.388. I would say, actually, let me pull to the daily so I can get a little better idea. Yeah, I would say if it does break up about 0.038, I would say it wants to rise to about 0.04. 0.0421, somewhere thereabouts, where I'd have to reevaluate. But that'd be very, if it does decisively break above that 0.0388, decisive break above that zone, guys. By decisive, I really mean I'd like to see a daily, not really a 4-hour, a daily open and close above that zone. Tron would have a whole lot of potential to the upside, and I have to reevaluate. All right, quickly, one more. Kevin Roberts says, got stopped out but re-entered as this feels corrective. Also, divergences on the hourly double bottom make me feel good about this. Have a great weekend. Yeah, okay, man. I'm glad to hear that, Robert. And yeah, hopefully you got in on that small double bottom on that on the hourly that we talked about last time. And hopefully you should be in profit right now, man. I would say if you are in profit right now, this thing could break in either direction, as we've talked about, especially if you're trading on leverage. I would increase your stop loss. I'd probably have my stop loss sitting about a 1.5% below current price, maybe a percentage to be a little bit more careful, knowing this thing could break strongly in either direction. But congratulations, Robert, man. The more I talk to you, man, it sounds like you're really learning your way around here, man, and that's great to see. Handy Rem says, the trend is bullish. I'll continue to trade the trend until the end of the trend. Yes, that is true. The trend overall, as the saying goes, the trend is your friend until the trend does end. No question about that. That's very true, but that also depends on what time frames that you're trading. Are you trading the macro trade or trend, or the micro trend? Are you trading a correction, which would micro trend would be bearish, or are you trading the overall trend, which would be bullish right now, and then you'd be bullish? And it really does depend on which trend you're trading. And so I'd be very, very careful. But yes, you want to trade the trend until the end of the trend. But again, I would have to argue, what trend are you talking about? If I'm looking in here at this overall correction from this just massive blow off back in on June the 26th, of course the trend is down here. And I'd be continuously looking for price to bottom out, quick scalp, and then get out again until we do get an overall bottom here. But until we do get an overall bottom on this correction, typically the micro trend has been down, even though, again, I could look at it this way, though. I could say if this was bottom, and now I'm trading the micro trend of the micro trend, and then we're getting into scalp trading and day trading. So again, I would say it all depends on what trend you're referring to. But if you're referring to the overall macro trend, there's no question about it. The overall macro trend, as of right now, is bullish. Of course, in my opinion, some people say this is a bear market rally, but you certainly can't say that we haven't seen a nice little uptrend over the last few months. All right, Jay Stinger says, thanks again, working. Question, do you do your TA based on support resistance mostly, or do you pattern trade on lower time frames? Thank you very much. Answer this question, Jay, and yeah, basically, as I put in my answer, my bread and butter is basically support resistance, moving averages, exponential moving averages, RSI, Bollinger Bands, fib levels, and volume, as well as some various chart patterns if and when they do show up. Don't put a whole lot of emphasis on chart patterns as far as being bullish or bearish, except for ascending or descending triangles, mostly ascending triangles, or wedges, not for a breakup or breakdown, but just to know when typically the price is going to break. But certainly I do use the MACD as well, long and short ratios, etc., etc. The excuse me, Elliott wave at times. But those are my bread and butter, basically support resistance, moving averages, RSI, Bollinger Bands, and fib levels. All right, Ballsy Balls says, thanks, great work. Job numbers will likely see Fed hold off on cutting rates, therefore not supporting higher prices for Bitcoin, in my opinion. What do you think? I think that a lot of people are putting maybe a little bit more emphasis on the on interest rates on the price of Bitcoin than should be, at least in the U.S. Overall, we certainly are seeing people start to cut their the overall world. We are seeing a lot of people overseas, and by overseas I'm in the U.S., so I'm referring to overseas in that matter. We are seeing people cut their interest rates. In that sense, we are seeing a lot of insane things, like Italy looking at taxing people's merchandise inside their own personal safety deposit boxes. I mean, it's just insane what we're saying, because they have no way to pay the national debt. U.S. right now, they can kick the can down the road, but the fact that we do have national debt, if I can talk properly here, that's about to just completely explode over 20 trillion, that is not a good sign for the long haul. So I mean, in the short term, though, your point is taken. If the Feds decide not to cut rates, could that have a temporary effect? I think it's going to be more of an emotional effect than anything else. But I'm looking at the overall trend worldwide, and the overall trend worldwide is without question one that would bode very, very well for Bitcoin. As much as I'd like to say it for purposes of holding Bitcoin, I hate to see it, because that a lot of people are going to end up getting wrecked anytime you see government currencies start to go to the wayside and inflation get out of control. It's the average average person that suffers, and you hate to see that. You hate to see mismanagement by government politicians who've never run a business in their life, and then that destroys those people that are lower on the ladder there. It just kills me to see, but there you go. All right, Waken says, what if the 8,500 CME gap gets filled and then continues to go down, down, down? Well, if that does happen, it will continue to go down, down, down. In the bottom I'd be looking for would be about 7,000 if that $8,500 DAP does get filled. All right, guys, does get broken. I'm gonna go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe. Take care of yourselves. This is Working, signing out.